Welcome to Facts Pro, where it's all about facts, financial, accounting, and tax strategies. Today, we want to talk about the biggest expense of our life. We usually don't look at this as an expense. We don't really know that if there's anything that we can do about it, or it has to be the same way. It is something that we have to accept. It is what it is, and there is nothing for me to do about it. All right, so what am I talking about? Definitely taxes. All right, so let's dig in and talk about the importance of tax planning, especially in 2025. All right, so I'm gonna share my screen and we'll start right in. All right, so as you know, I always like to start with a joke, and this is I don't know if it's a joke or if it's really like a fact that every year you make the same mistake on your tax return that you try to do it yourself. Sometimes it's very, very complicated that by doing it yourself just to save on the tax preparation fee, you find yourself stuck with a big tax bill and you think that it's going to be the same outcome. And maybe you're right, but that's not the same case with tax planning. All right, so what is the importance of tax planning in 2025? Why you shouldn't and you can't wait until tax season? This is what we're talking about today. First, we have to understand that taxes are our biggest expense. It could be even more than your mortgage, more than your education bill or your kids' education bill, your health care, because you pay federal taxes, you pay state taxes if you live in a tax state. You pay payroll or self-employment taxes, Medicare, Social Security. You pay property taxes if you own a house or a property. You pay sales tax, definitely, and even the free income tax state, you usually are subject to sales tax. So all of these together, they add up. And without planning, you really are overpaying. Why 2025 especially is a critical year? Because you may have heard in the news that the One Big Beautiful Bill Act is already a law. So it brought major tax changes, and these tax changes have different effective dates. It has different termination dates. Like one example, do you know that if you want to get your EV, like your electric vehicle, you need to do that before September 30 of this year, that's next month, to get the credit. So if you are not doing this, you may be, if you're not aware of this rule, you may bypass such a big credit, $7,500 dollars. So this is just one example of one thing that was in effect in just such a random date during the year. Another thing is bonus depreciation that started retroactively, not the beginning of the year, but to January 19. And there is a lot of more examples of certain credits, certain provisions that were like subject to different tax termination dates, subject to different effective dates. And knowing this is very critical in your planning because you need to plan around these dates. So the decisions you make now can lock in major savings for the year. All right, what happens if you don't plan? Definitely you miss deductions because some deductions are it's going to be very late to take if you're just to remember that you'll be subject to a big tax liability after year end. So some deductions you have to plan it and you have to take it during the year. You can't wait till the year ends. Higher taxable income, of course, when you miss deductions, the outcome of this is higher taxable income. Surprise tax bills in April. Sometimes you're prepared that you'll be paying taxes. A lot more times you're not aware, you don't know that you'll be subject to a big tax bill. You think that you have a W-2 and your withholding is enough, but with other sources of income in place, or if you have your own practice and you haven't been paying estimated taxes, or if you don't have the right payroll, you find yourself surprised with a tax bill. So when you have a big tax bill, what does that mean for your lifestyle, your business, your family? You have less money, you have less liquidity, you're paying a big tax bill. So that's what happens without tax planning. The opposite, the benefits of proactive tax planning, first is that it reduces your taxable income because we talk about the deductions that are allowed to you that you may not aware of on your own. It's not just office supplies and auto expense and this and that. There are some deductions in the tax code that you're not aware of, and that's my role as tax planner to educate you about it. Some tax credits that you also may not be aware of. You may not be aware of how it works, like R&D credit, for example. Things, a lot of things like that, that with tax planning, you're able to reduce your taxable income using it. You're able to optimize your business entity for lower taxes. As we may have mentioned before, one of the things is to optimize your entity structure to see if what is the ideal situation. We want to optimize that to result in lower taxes. Maximize your retirement contribution. You want to make sure that you have the right amounts in place and you are safe in this regard. You want to shift income and expenses strategically from you to your children. You want to do this in a strategic way for also like estate planning purposes. And you want to be in compliance. You want to avoid penalties. You want to avoid underpayment surprises. So with proactive tax planning, you're able to do all of that. And that definitely translates into your lifestyle. Like it changes, it has a big impact on your lifestyle because every dollar you save means a dollar for your future, means a dollar that you can invest elsewhere that can bring you more savings. So you build wealth faster, you have more freedom, you have less financial stress. You have money back in your control, not the IRS. You don't tip the IRS money away. You keep it for your own growth. All right. We keep talking about the examples and the scenarios like a doctor who was able to maximize his retirement contribution, and by that he saved like $20,000 in taxes. Another business owner, he restructured his entity and that like changed the type of entity that he was using for his tax practice, for his medical practice, and he was able to cut tax rates significantly with this restructure. Others gifting strategies that were able to save a family on estate taxes. So with the new exemptions and with the new thresholds in place, all of this have a big impact on what you can do for yourself now and for your family in the future. All right. So why act now? Why not wait? Because many strategies must be done before year end. I can't stress this enough. A lot of things you have to start now, if not even before. Waiting until April is going to be too late. And again, 2025 is a unique year with laws set to change, with some things set to change after December 31st. So we have to act now and not wait till the year ends. How to get it started? Of course, we have to review. You have to review your income, your expenses, your entity type. That's why we say hop in on the tax strategy session because during this session, we're going to review what you currently have. And you need to work with a tax advisor, not just someone to fund your taxes, but some financial strategies and tax strategies. And you implement the strategies before December 31st, 2025. It's very important to implement it before the year ends. So again, tax planning means lifestyle planning. The earlier you plan, the more you save. And I want to help you to build your 2025 tax strategy. So I'm inviting you to join me in a conversation that's a free 30-minute consultation. And we'll go over your tax plan, your tax structure. We'll see how can you save on taxes in a very strategic way, in a legal way, using the tax code and leveraging it for your own benefit. All right. Thank you so much. I appreciate you being here and see you soon.